Hello everyone. In this video, I'll discuss about the public limited company as a form of business organization. So like a private limited company, this form of organization will have a legal identity, which means that accounts of the company and accounts of the owners would be different. These will be two different identities. Secondly, there will be continuity of the business, which means that if any shareholder passes away, still the company would be run and its existence would not be ended because of that. Thirdly, there will be limited liability. Now, in case business collapses or business fails, shareholders would be responsible only for their invested money. They will not have to sell their personal possessions to pay off all the debts of the company. Fourthly, in case of public limited company, as these companies can sell their shares in the stock exchange, and there is no upper limit for the shares, which means that a number of people can buy these shares. So these companies can be financed by huge amount of capital, and they can have good expansion plans. Lastly, these companies will have different types of shares. For example, ordinary shares, preference shares. So they can satisfy different types of investors, and they would be more willing to buy these different types of shares. On the other hand, for the problems associated with public limited companies, first of all, to convert any business into a public limited company, it's a lengthy procedures and a costly procedure, because companies have to make a lot of documents. They have to get those approved by the registrar of the company, and then their company would be registered as public limited company. Secondly, there would not be a direct link between workers and board of directors. That might create a problem for the workers. They might not be happy with this, that they cannot be in contact with the directors of the company. Those take decisions on a daily basis. And then thirdly, there will be slow decision making. Obviously, limited companies, they operate in different countries. They have departments in different places. So it means that it becomes difficult to frequently organize meetings to decide different issues related to the company. So that's why they will have slow decision making. Fourthly, it's difficult to manage. We know it whenever there will be large businesses. Obviously, because of the large size, businesses would face diseconomies of scale. So same is the case with the public limited companies. Because of the large size businesses, it's difficult for the business to operate in an efficient way. Fifthly, there is always a threat of takeover. Sometimes these companies, when they sell their shares in the stock exchange, other big companies, they buy their shares until they become owner of 50% of the shares of the company. So this is how sometimes they take over small companies. So there's always threat of takeover by a bigger companies, bigger financial institutions for the smaller companies. Lastly, accounts of public limited companies, for example, income statement and statement of financial positions. These accounts will be open for the general public, because these companies look for investments from the general public. It also means that competitors can also see our performance, where we stand in that industry. So this is a problem when we keep our accounts open for the general public. Now these are different advantages and disadvantages of running any business as public limited company. I hope you understand this topic. Thank you for watching the video. Happy learning.